Bitcoin smashed the records in October, going up over 28%, taking out key resistance levels. So is this trend going to continue in November? And what can we expect from Bitcoin, the stock market? And let's take a look at altcoins as well as we lead into the end of 2023 and potentially what can happen in the early part of 2024. Make sure you hit the like button and subscribe to the channel. Links in the top of the video description for our free crypto and economic report. I'll talk more about that stuff later in the video, but this is the video you don't want to miss. We are looking at the forward returns for Bitcoin as we continue to push forward with this bull market. Now we are 11 months down into the bull market, heading into our 12th month of the bull market. So we've got a fair bit of data to get through, and this is similar to the video series that I've been doing on the channel for the monthly forecasts. Okay, so if you haven't seen them, go and check those videos out, see how the results have panned out over time, and I'll leave a link to all that stuff at the end of this video. So there's going to be a big turning point in the coming months, and of course I'll talk about that in the future, but I just want to give you guys a heads up now. As this market continues to progress through the bull market, each of these stages gets more and more risky. It almost seems like the lows are the riskiest time to be buying, but in fact, for a risk reward, it's the least risky time. It's just how do you know when those lows are? And of course, that's what we go through on the channel many, many times, understanding the time cycle that we're in, and of course, some price resistance levels as well. But the most important thing to look at is the time aspect of these markets. So we are into that 12th month, and I just want to cover that where we currently sit for this period as as we lead into that next section, because many have missed out on buying that low. Many missed out when the market continued to accumulate through 2023, and then the market's broken out again. So the market's up over 100%, and you still have bears wondering whether this market's going to come back down to $10,000. It doesn't seem like that at this stage, so let's continue to set up that plan moving forward. So 12 months in from the bear market low of 2018, leading into that pump in 2019, you can see that the market was well and truly up by that stage, and it was over 100% move to the upside. Now we got the black swan event that pushed the market down, but you can see that if we didn't get the black swan event, you can see the market was basically ready to hold up at these levels for that period. The reason I say that is because the following month, the market took off and then came back into that price zone. So we have all the ifs if this didn't happen, but nonetheless, the market was ready to start accumulating again, reaccumulation, and then pump to those new highs. So going back to the previous cycle again, the 12 months from the cycle low of January 2015, you can see the market already had accumulated and then broke out to the next stage of the reaccumulation. And then that following 12 months, it basically broke out of multiple reaccumulations. This was the end of that following 12 months. So there is your zone for the second 12 months of the bull market. So this is the last month in the first 12 months. Then we head into that second 12 months, and typically that final 12 months, which is year 3, doesn't necessarily last the entire 12 months, but we'll get to that. We've still got a couple of years left. The main thing to note here is that it seems like we will be leaving these stages in the coming sort of few months to 6 months. So I want to get into those forward returns so that we can best prepare for those times in the market. We've got some price targets to the upside, the downside, and everything in between, which is all building upon the previous data that we've gone through here on the channel. These last few videos in particular have gone into great detail with price targets for BTC as well. If you want to know exactly where we're getting those points, I'll leave a link to them at the end of the video as well, so you can just click on that nice and easy. Yesterday's video was focused on the stock market's bottoming, because of course we need to see that also rise for Bitcoin as well to obviously continue on with the bull market. There's obviously recession fears that continue to cycle through the news as well, but like we've talked about since 2021, which you can find the receipts to on the channel. 2021, mind you, this is before everything that's happened and the bull market was still in play. We were under the impression that this theory, this cycle is going to continue on. And so far it has done exactly that. So it's pretty difficult to sort of go against the mainstream trends, especially when they're telling you the market's going to collapse and it's going to pump and then it's going to collapse again. So who do you trust in the market? I like to go back to the timing aspect and the data that has been around for over 200 years to give us a roadmap of what we can expect next. So that's a long way to tell you that the market is still in this stage of the 18.6 year real estate and economic cycle. So we get that. We've looked at it in yesterday's video as well. And we're sort of in this middle period here, and it doesn't look straight up. It sort of moves like that, right? Until we get into that mania stage when everyone understands, oh, this was a bull market, and the bull market started back at the low, not at the breakout period where the mania hits. So we're in that stage. We're still seeing real estate prices go up, that sort of thing. Now, back to October and November. October is just finished, so it gives us that data, and then we can move that forward into November. We're looking at the October periods here on the S&P 500. So we know from history that October has been a pretty significant time for key lows in the market. We saw that in 2022 when that cycle low came in. On top of October, March is also a great month, and June is also another good month for lows, but it's also significant turning points. And you can see October was the GFC all-time high as well, and then the very significant pullback that we got in 2011 after the crash of the GFC. It looks like you should have called it by that stage, but this was very similar to what's happening right now, where the majority of people were extremely bearish. Now, I know many of you are in my age bracket, and there's maybe 1 in 4 people that are 10 years older than me. Hopefully you remember at that stage, because if you can remember, then you're going to do better in the years coming up. Because this was when the masses, the media, we had Occupy Wall Street going on. It was mayhem, but the market bounced really hard, 100% by that stage. So this correction was very bearish. So the point of that is October can be pretty good months for that. So how does that all weigh into yesterday's video as well? Well, it's the overall index that we're looking at. So some stocks may still come down and test those 50%, while the others continue to hold the market up, which then balances out the S&P. So just going back again, October 2002, 20 years ago, nice low there. Maybe we get another low here in this October, or of course, if we get a little push down into November, again, that could be a possibility, just like we saw at the GFC. October was the significant crash with the Lehman Brothers, and then November pushed that little bit lower, bounce, lower low for March, and then the market took off from that point. We can keep going back. Very significant crash here in the recession, 1990s. And then, of course, the Black Monday October crash in 1987. We can keep going back, but I think you guys get the point about that October can be a good time for those lows. So what happens after that point? Well, we haven't ever had an S&P market bounce or recover 50% from the bear market like it has done. So there's 50%, and then go on to make a new low. So with that in mind, and potentially after 3 red months, there is the possibility that we finally see a bounce from this point and get a green month. Now, the idea behind that is that we're seeing the market sit on top of previous resistance, which is now becoming support. So there's around this 41.55 on a more macro basis. And then that monthly close actually closed up higher than the low itself and had a nice big move to the upside. So these are just some signals, at least in the short term, that the market is trying to find some strength here to then push on to the next month into that green. So what we're looking at for the shorter term timeframes to give us a signal that we could be going into a green month for November, even though some of the history says that not all Novembers are going to be green. That's understandable, but we're looking at what's happening in the market itself and looking at where these support and resistance levels are coming in. We've seen 2 green days so far in a row from that October low on the bounce here. Now to the upside, the market needs to recover 4,235, so 4,235. That is the previous swing bottom where the market just broke down from on those last few days of October to that low. Then that brings us up to the 50% level of 42.76. And then from that point to the previous low in August, before it basically broke down from there, gives you your 43.50. Now, if you want some easy round number at the top, you're just looking for 4,400, where it overcomes all of these levels. But in a stair-stepping basis, from the small time frames to the larger time frames, these are the key levels that we're looking out for the market to give us those earlier signs that we might recover from here and start to see a bit of a green month in November. Now, that doesn't mean that we're going to see the market explode in Q4 and take out the July top. So the price or the percentage from that move is of roughly 10%. So that would mean in the last 2 months of the year, the market would have to do 10%. And so what it's already done to the downside is 12% 11%, sorry, from the top to the bottom, and obviously a slight recovery here. So it's probably unlikely that we're going to see in the last quarter of 2023, the market recover and take out that high. However, what we can see is that in this seasonality, especially in the pre-election year, so the third year of the election term or the presidential term, the market tends to recover towards the end of the year. Does it have to happen exactly? Of course not, but there typically is some of that strength at the end of the year. But like we looked at in yesterday's video, it doesn't mean that the market has to come back and take out that top that it set in July. Because of the move down, it's probably going to take a little bit longer and push us into the first half of 2024 before we come back and test that. The good news, the fantastic news to that is the longer this takes and we continue to put in higher lows, the stronger the move is going to be to the upside. So that means that we're probably seeing more accumulation at these levels, and there's the potential for the market to push up even higher past these highs when in fact it's time for it to do so. And so I bring that back to the real estate cycle again to marry it all together. We still have time to go here before we see the peak, like it says here, somewhere around that 2025, 2026 for the land cycle, the real estate, land, and the economic cycle, which means maybe this is just buying a bit more time to then be able to push up and continue the pump to the upside. So in the short term, we are still waiting for this low to come in. Once we get that, then we're going to be able to see where does it start to test, reject from, or start to break out of. That's going to give us that sign of what the market wants to do from that point. Because at the end of the day, we've had 3 red months. There is the possibility that we do see a bounce, but I want to play it a little bit safer to see if the market can overcome the previous support that became resistance. That's the key thing here for the S&P. It doesn't seem like it's affecting the Bitcoin prices. Obviously, Bitcoin's been up 28% in the month of October. Now, I've got a few statistics to get through here, looking at the totals and what Bitcoin typically does in November. We can see that we've had 10 months here, 10 months of data at least, and green is 6, red is 4. I don't have any flat months here. I'm calling flat anything under 0.1%. It just seems too obscure to be adding into the data to call it green or red, so I'm just going to leave those out. But essentially moving forward from here, that gives us a 60% hit rate that we're going to see green. It's not enough for me to say that it is a guarantee that we're going to see green, but I've got other data I want to get through to let us know that potentially we will see a green from this point. Now, the 71.4% chance of a green month for Bitcoin in November comes from removing the bear years. So I guess you have to agree on that yourself, that 2018 was a bear year, 2022 was a bear year, and 2014 was a bear year. So take those out, drop this down to 7 total data points. This takes out 1 green and 2 red, gives us about that 71% chance of a green month, considering that this is the year after the bear. So if we look back at the years that were after the bear, we had a red one in 2019, but remember that first pump out of the accumulation that happened in early 2019 was so extreme that it was pretty hard to continue having those green months after such an extreme move. And then if we take a look back at 2015, we also had another green month from that point. So that's why I think Bitcoin is moving more so like the 2015, 2016, rather than the 2019 to 2020 sort of move. Now, speaking of green months in a row, especially once they've broken out of resistance levels like we have done in October, the trend is to more or less see higher prices from that point because, well, we've seen the strength upon strength. We're seeing the breakout, we're seeing increased volume here, and of course the breakout of 32. So the old saying, strength begets strength. It's likely that we'll probably see higher prices than 35,200. What does that mean? Well, I think we're going to see a little bit of up here. Where can we see those up prices to? Where is this market going to top out? Well, of course, we come back to the 50% levels. We're looking at that $42,000 level for another key resistance point. And also, we're looking at $48,000, which is the monthly lower swing top from the bear market. So we've got a couple of targets further up in terms of a percentage from where we currently sit and what can we stand to make on paper profits here. 20%, 22% to the 50% level, and then up to around 38% to the monthly lower swing top. Where does that take us from the low though, the swing bottom? That total move is roughly 68%, and to these highs around 92%. So that's all still within the price being underneath the old all-time high. Still pretty significant gains to be had from Bitcoin itself if you're looking to trade it or invest in it. But be careful as we lead into that second year of the bull market. As the old YouTube title goes, time is running out, especially if you're in the macro bearish camp. But I think by now, if you've watched 15, 20 minutes of this video, you're probably not a macro bear. You're seeing the market for what it is and just trying to position yourself the best way possible moving into this, the last part of 2023. And what I think for 2024, we're probably going to see some pretty significant moves to the upside as well, which leads me to the total crypto market cap, total 3. Now, this one here is a specific indicator, or basically a specific chart that we've created. That's TIA, crypto total market cap here, which we remove, or you have the option to remove Bitcoin, ETH, and all the stable coins as well. So you can get a clearer read on the market. Now, the market put in a low. So this is all of the cryptos, not your Bitcoin, not your ETH, not your stable coins. It put in a low in December of 2022, but it seems like the entire accumulation range here has basically been building up since June of 2022. So that's when ETH bottomed. So from June to now, we're roughly 17 months in. And we're looking at approximately that 2-year period before the markets really start to break out. So this comes into a lot of the data that we've done here on the channel. So make sure you do like and subscribe so you can stay up to date with this. And at that point, 22 months takes us out to Q2 to roughly Q3 in 2024. So I think that this is where the market is building up for that pretty significant period. So the altcoin market could potentially have bottomed in December. If you want to play it safe, you wait for the breakout of the market. And that's why it's pretty difficult to be saying that the market has bottomed for sure. It looks like it, especially with the low coming in here and then another higher low and the possibility of it breaking out. It looks like it's setting up to do this and confirm that, because right now there isn't a confirmation of it, but it looks like it's setting up for that. And I'm sure there's plenty of folks out there that are going to write in the comments saying, I told you this was a low, yada, yada. Of course, it looks like it in hindsight, but at the time, you're not really sure because it can continue going down. And on top of that, the million altcoins that are out there, it's not to say that all of them bottomed here. A lot of them continued down against their Bitcoin value from June of 2022. So keep that in mind as well. There are a few that do stand out, and I hope you find those ones to make the 100x, 50x, whatever. But going back to the time frames here, you can see from the previous cycle to where this market broke out, we're looking at the top here. So that's roughly 27 months going back from the breakdown. If we want to take it from the low itself to the breakout, that's 23 months there. So you can see that this sort of 2-year time frame, we're moving into that second year of the start of the bull market, is really that time where it starts to get a little bit more volatile. And year to year, there you go, there's the 12 months. You can see the volatility here, the move to the upside, the COVID crash, and then a quick move again to the upside, which gets you set and prepared for the big altcoin season, which is potentially coming. So this next stage, so what we're building up for here is potentially this, which is the fake out altcoin season, probably one of the best ones we've seen for over 12 months. But I think it could be another fake out one before we get onto the real deal, which I think starts in late 2024 and potentially carries over into 2025. It seems like the time is running out for those that have missed out on the lows. Then they're going to start to put their hard-earned money into riskier assets, and you can see it begin to play out now in the altcoin space. Now, I think there is still several months to go, as I just mentioned, and that first scare is something that will capture them and then bleed them out again. So possibly capture them, bleed them out again, thinking that it's all over. But before we know it, and we get into that second half of 2024, that's when it starts to pump again. So it's still very easy to get screwed in this market if you're not paying attention to what's going on. Going back to the Bitcoin monthly returns, the forward returns from this point, this is the 1 month. Now let's move forward to the 6 and 12 months to have a look at the possibility of what comes up next for BTC. If we look forward from now, buying on November 1st, and then going all the way through 6 months to that point, selling on the last day of April, or a 12-month return from this stage as well. How good does that look? Well, you can see the results here. We've got 14 data points here from the Bitcoin cycles. 10 of them green, 4 of them red, gives us a 71% chance of a win rate over the next 6 months for BTC. So looking at what happens in November is pretty difficult to say whether it's going to be a green or a red or a flat month. Is it going to push higher, then crash lower and then end up going green? I mean, it's kind of anyone's guess. And what I've tried to do here is note that it looks like Bitcoin is attempting to get higher than the 50% level here, like dead on here, 34, but it has the chance to push higher because previously when it breaks out of resistance levels, it doesn't just break out and then come all the way back under, especially with the macros here. So we have the possibility of coming up and testing the 40s, 42s, 48s, but then that might be the bleed off, like I've just pointed out, as we look at the altcoin that sort of suckers everyone in. And then we need that more time just to calm down, digest the move before we can start to move again into that last stage, which is why I think we're moving into this next 12-month period, the second year of the bull market, which leads into that final year and builds us up for that monumental finish. So for that 6 months, gives us a 71% hit rate. But for the next 12 months, we got closer to an 80% hit rate of getting a positive return if we look back over the last 14 data points, which is 14 years of Bitcoin history. Now, you can even improve these numbers if you take out the bearish years. So starting in 2021, that was the peak. November 2021, Bitcoin peaked and then it collapsed. So you take that data point out. Then you can come back and take out the 2017, 2018. It peaked in December. So yeah, buying in November was pretty crazy. Then you had a 2% loss there. Then you can come back as well. You got 2014 there. So you can almost wipe these out and get almost 100%, but I don't want to move the data points around too much without a clear, hard and fast rule, which the majority of people don't have. They don't have clear, defined rules that you can easily backtest. So choose your pick here. Don't buy Bitcoin after 2 years from the cycle low. Or if you want to say don't buy it after 3 years from the cycle low, take your pick, do your testing. Either way, that would clear you out of a lot of these losses so that you don't get suckered in at the end of the cycle. Clear, defined rules are going to set you up for great opportunities in this bull market. That's a good place to remind you about TIA Crypto's free crypto and economic report. You know the deal, link in the top of the video description. I hope that was helpful for you guys. Let me know in the comments section what your thoughts are on the end of 2024. I'll leave it in the pinned comment at the top there. Videos popping up on your left-hand side. Like and subscribe. See you at the next one. Till then, peace out.